Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today is November 2nd, 2025, and we are taking a deep dive into Ethereum, symbol ETHUSD, which is currently at a fascinating crossroads. The market is being pulled in two different directions by powerful forces, and we're here to break it all down. First, we will cover the major news events creating waves across the crypto space, including the monumental Fed interest rate decision that everyone is waiting for. Then, we will transition to the charts to analyze the price action, identify crucial support and resistance levels, and map out potential scenarios for the days ahead. Let's start with the macro environment, because it's impossible to ignore the elephant in the room, the upcoming Federal Reserve announcement. Market consensus, supported by FedWatch data, is overwhelmingly pricing in a 25 basis point rate cut, with a near 100% probability. Historically, rate cuts are extremely bullish for risk-on assets like cryptocurrencies, as they signal cheaper borrowing costs and increase liquidity in the system. In fact, some analysts are predicting that a confirmed rate cut could be the catalyst that pushes Ethereum towards a new all-time high, with some even targeting the $6,000 mark. However, there is a small but notable risk factor involving President Trump's recent tariff escalations on Chinese goods, which could, in a surprise turn of events, cause the Fed to pause. Should that happen, it would likely trigger a major drop across crypto prices, but most traders are viewing this as background noise compared to the Fed's signal. Now, for the Ethereum-specific news, there's a significant bearish cloud that's been lingering since late October. On October 22nd, the Ethereum Foundation moved a staggering $654 million worth of ETH, sparking widespread concern of an impending sell-off. This wasn't just a small transfer, it was a move that put the entire market on edge, with on-chain data at the time showing a decrease in confidence among large holders and a sharp decline in staking inflows. This event injected a heavy dose of fear into the market, and traders are still watching wallets related to the foundation very closely. On the flip side, the long-term bullish case for Ethereum continues to build steadily. We've seen reports that spot Ether ETF inflows actually surpassed Bitcoin's during the third quarter of this year, which is a massive signal of growing institutional appetite for ETH. Furthermore, the Fusaka network upgrade has debuted on its final testnet, promising crucial security and scalability improvements that strengthen the fundamental value of the network. So we have this tense dynamic, a potentially bullish macro catalyst clashing with bearish on-chain FUD and strong long-term fundamentals. Now let's see how this all translates to the price action by pulling up the full daily chart for ETHUSD. Looking at the bigger picture since the summer of 2024, we can see a market defined by extreme volatility. We experienced a gut-wrenching drop down to the $1,400 to $1,500 level back in April of this year, which formed a major long-term bottom. From there, we saw an incredible bull run that took us all the way to a peak of nearly $5,000 in late August. Since that August high, the price has been in a significant corrective phase, establishing a series of lower highs and lower lows. We have now pulled back over 50% from that peak and are consolidating in a range that will be absolutely critical for determining the next major trend. Let's zoom in on the price action from the beginning of October to see how the recent news events have played out. Here we can see the market attempting to rally in early October before it was met with heavy resistance. Now, let's focus on the news of the Ethereum Foundation's token transfer on October 22nd. Looking at the chart, we can see a clear reaction. Following a day of indecision on the 21st, the price began a sharp descent. The price dropped from an open of around $3,874 on the 21st, and over the next few days, it fell aggressively, bottoming out near the $36.70s. Wait, my apologies, I'm looking at the wrong price scale from my notes. Let me correct that by looking directly at our chart data for October. As we can see here, the price on October 21st was actually trading around $2,665. The news hit, and while the candle on the 22nd shows a mild drop, the real fear materialized over the next 3 days, pushing the price all the way down to a low of nearly $2,379 on October 25th. This was a clear fear-driven sell-off, directly correlated with that foundation news. After this drop, buyers stepped in to defend the sub-$2,400 level, and the price managed to climb back up towards the $2,700 resistance zone. Now, let's look at an even shorter time frame to analyze the market's behavior in the days leading up to the Fed announcement. On October 31st, we saw this large, bearish red candle, representing a steep drop of over 5% in a single day. This move from above $2,650 down to $2,500 was a classic example of the market de-risking ahead of a major economic event. Traders were clearly taking profits and reducing exposure in case of a negative surprise from the Fed. Following that sharp drop, look at the candle for November 1st. It is a small, indecisive candle with a long lower wick known as a doji or a spinning top, which signifies a battle between buyers and sellers resulting in a stalemate. The market sold off, found support, and closed almost exactly where it opened, indicating extreme uncertainty. Currently, the price is hovering right around the psychologically important $2,500 level, coiling in a very tight range. This consolidation after a sharp move down is like a compressed spring. It is building up energy for its next significant move, which will likely be triggered by the Fed's decision. So, let's bring it all together and recap the most important takeaways for anyone looking to trade Ethereum right now. First, let's be crystal clear on the key price levels to watch. Immediate, critical support is the zone between $2,380 and $2,500. This area has served as a floor multiple times over the last few months. A daily close below $2,380 on high volume would be a very bearish signal, opening the door for a potential retest of the September lows around $2,200. To the upside, the primary resistance level to watch is the recent high around the $2,700 to $2,750 area. Breaking through that zone is the first requirement for bulls to regain control of the short-term trend. Above that, the next major target would be reclaiming the psychological $3,000 level. Now for some potential scenarios. The bullish case, which seems more probable at about 60% likelihood given the expectations for a rate cut, involves holding the current $2,500 support. A positive announcement from the Fed could trigger a relief rally, pushing the price to quickly challenge that $2,750 resistance. A strong break and hold above that level would confirm bullish momentum and could start a new leg up. The bearish scenario, which I would place at a 40% probability, would be triggered by two main events. First, a surprise from the Fed where they do not cut rates, which would likely cause an immediate market-wide sell-off. Second, even with a rate cut, if bullish momentum is weak and sellers manage to push the price decisively below the $2,400 support zone, it would signal that the bearish sentiment is still in control. In that scenario, a drop to $2,200 becomes highly likely. So, the things to watch are simple. First, the outcome of the Fed meeting is paramount. Second, watch the volume on the next move. A breakout or breakdown on high volume is far more convincing. Finally, keep your eyes glued to that $2,400 to $2,500 support range over the next 48 hours, as it will likely determine the market's direction for the coming week. It's a tense moment, with the chart showing a clear equilibrium before a major news catalyst. That's our complete breakdown of Ethereum for today. Thank you for tuning in to Explain the Charts. If you found this analysis helpful, please hit the like button and subscribe for more content. As a final reminder, this video is for informational purposes only and is not financial advice. Cryptocurrency markets are incredibly volatile, and you should always conduct your own research before making any investment decisions. Stay safe, and we'll see you in the next one.